The crypto party feels like a distant memory. After a spectacular peak of nearly $127,000 in October 2025, the market has been caught in a frustrating and painful downturn. Both the end of 2025 and the start of 2026 delivered negative returns, erasing much of the recent excitement and leaving investors exhausted. Welcome to the generational wealth community, your pathway from knowledge to legacy. We don't chase hype, we decode the market. The buzz has faded, replaced by one critical question: when will the bull market truly return? But what if that's the wrong question? While many are fixated on the short-term losses, a different story is unfolding behind the scenes. In this video, we'll cut through the noise. We are going to analyze the updated expert forecasts, what the charts are telling us right now, and the fundamental drivers that are still quietly building in the background. By the end, you'll have a clear, data-driven perspective on the road back to the top. First, let's get a reality check from the experts. Not long ago, predictions were flying for incredible new highs. Today, the mood is far more cautious, and most major forecasts have been adjusted to reflect a prolonged slump. Instead of a rapid return to all-time highs this year, many analysts see a period of consolidation. For instance, some AI models predict a trading range for Bitcoin between $75,000 and $95,000 through 2026. Others, like those from Binance, project an average price of around $108,000 for mid-2026. More bullish long-term forecasts from firms like RK Invest see Bitcoin reaching $1.5 million by 2030. But this is based on a much longer time horizon. This doesn't mean the dream is dead, but it does suggest that patience is essential. The consensus is that the road back to a new all-time high will be longer than many bulls were hoping for. So the experts are telling us to temper our expectations. What does the price action itself show? The charts paint a picture of a market that has lost its upward momentum and is now searching for a solid foundation. After the 2025 peak, the price has struggled, now sitting roughly 41% below its former glory. The Crypto Fear and Greed Index isn't flashing extreme fear, which often signals a market bottom. Instead, the current reading of 28 indicates a state of fear, reflecting a sentiment of fatigue and uncertainty. The key takeaway from the charts is not a signal of an immediate reversal, but rather a market in a long-term holding pattern. Historically, these extended periods of sideways action can shake out impatient investors before the next major trend begins. The big question the chart poses is whether this consolidation will build the base for a new launchpad, or if there are lower levels to test first. Now, let's talk about the bedrock of the investment case, the fundamentals. Because while price action has been disappointing, the underlying adoption of this technology hasn't stopped. The biggest game changer was the launch of spot Bitcoin ETFs in January 2024. They kicked off with massive inflows, proving deep institutional demand for a regulated way to invest in Bitcoin. After a period of significant outflows in late 2025 and early 2026, which saw more than $4 billion leave the funds, inflows have recently returned. In the last week alone, US-listed spot Bitcoin ETFs saw net inflows of $767 million. Beyond ETFs, we're seeing other signs of structural adoption. Institutional interest is accelerating, with some reports indicating nearly 90% of businesses are testing or using stablecoins for applications like cross-border payments. The stablecoin market itself has matured into foundational financial infrastructure, with a market capitalization over $312 billion and transaction volumes reaching $33 trillion annually. This isn't the retail-driven hype of past cycles. This is a slow and steady integration into the global financial system. So, when will crypto actually return to all-time highs? Let's put the pieces together. The expert forecasts have become more conservative, with most analysts projecting a period of consolidation for 2026 rather than a swift return to previous peaks. The charts show a market in a state of fear and fatigue, consolidating after a significant downturn with no clear sign of an imminent explosive recovery. And the fundamentals? The initial shockwave from the ETFs has passed, And we're now seeing a pattern of renewed institutional interest and gradual adoption. While risks remain, the long-term case for crypto is still being built, block by block. The idea of a quick bounce back to over $126,000 and beyond in 2026 seems unlikely based on the current data. The evidence points to a period of patience and rebuilding. The question for investors has changed. It's no longer about getting rich quick, but about whether you have the conviction to stay the course through a challenging market. Subscribe for daily recaps, drop a comment on your biggest takeaway, and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.